and gentlemen of the crypto space. We're live on a Monday, August 25th at 11:32 a.m. We start out with a little bit of macroeconomics. Obviously, there was a lot of volatility over the weekend, especially Sunday night, and it was prior to futures open. It was prior to 6 p.m. Eastern, where there was a massive offloading of Bitcoin, which dragged down the market. We were briefly way past or meaningfully past all-time high in Ethereum, up at 4,900. We're back down at 46.33. Basically looks just like standard normal volatility. We're down 3%, 4,600. Back to Friday, Saturday valuations. So I'm not too swayed or influenced or affected by volatility. After all these years, shouldn't we all have acclimated to a degree to this kind of volatility? Not that it was really a lot of volatility in the grand scheme of things or historical context. We've obviously seen significantly greater historic volatility such that this is not a lot of volatility. DXY on the weekly from a macro standpoint is probably the biggest thing to write home about. We are still below the 100 SMA on the weekly, and this is the longest time we've been below the 100 SMA on the weekly since November of 2020. If folks don't remember, December was a lull. And then January of 21, we were off to the races. So obviously, we had a nice drive down on the relative valuation of the dollar. And here's your double top in Bitcoin, more or less, heading into summer of 2021. And then the market was trying to figure out, is the dollar going to rally or is it going to reject off the 100 SMA on the weekly yet again? Because it clearly did back April of 21. So that's really what the market, in my opinion, is trying to sniff out. We've already had retesting of the 100 on the weekly, and the market's trying to sniff out if that retest is sticky or not. If we have further downside to the dollar, because you got to remember when you have dollar valuations being assessed, you know, the market actors, investors around the world are like, they're thinking into the future. They're thinking, all right, great, this is interesting. But are these valuations going to stick over the next 6 months, over the next year? What is the trend? So once the market sniffs out that the trend for the dollar is down and to the right over time, then you start to see the structural reallocation of capital around the world towards a dollar depreciative environment. I still don't think we're there yet. And clearly we see that in market activity. I don't know necessarily what's going to play out with the equities markets. It's a bit of uncharted territory um, across many different things that we can inspect, and I dare not inspect stuff like historic valuations and um, what is inflation adjusted all-time highs and how do we compare to the Great Depression and Bitcoin narratives like this is all going to fail and Bitcoin fixes this. We don't need to talk about those topics. I've never found them interesting. I find it more interesting like the way Brent Johnson talks. It's understand the way the system works and allocate capital accordingly. And everything else is noise. So that means end of the world scenarios. That's not going to influence the way we talk about capital allocation. We're going to follow the rules. We're not going to be affected by exuberance. We're not going to be affected by, you know, grandiose narratives or narratives that we should probably be ignoring. We're going to stick to the plan. And that's why we've created rule 1 through 3. In the comments, if anyone wants me to go over rules 1 through 3, please feel welcome to ask. Move indicators still below 80. We waited a long time for the move indicator to get below 80, and we just ticked there, and we are on week number 2. Let's see what happens. Obviously, I follow the 10-year, and that's just a small keyhole inspection of the overall market condition, 0.78% on the day. Doesn't really lead 100% into what the move's going to do. You can see a pop with yields going up a little bit. So that's why they're two separate things to inspect. Obviously, if the move ticks down from here down to 77, I think markets are going to really sniff that out. They're going to really start to price in dollar down over time. And that, because that's where we are. As I started talking about with the DXY inspection, once the global markets really start to sniff out that the expectation is further depreciation of the dollar over time, then we'll start to see the interesting pricing in that we're all so fond of in the crypto markets. What else is interesting from a chart data perspective? Curve taking a significant pullback, both dollar and Bitcoin denominated down to the 80s yet again. Spell above 5,000. That's nice to see. Bitcoin 112, Ethereum. Probably the most interesting observation from an Ethereum and Bitcoin standpoint is how strong they are. $112,000 is an insane valuation. I did a post a little bit earlier. You got your circle for your all-time high or this level here, which is basically being retested. So this is a weekly chart. So this is almost 2 months, 2+ months of price action above this level. But this level hasn't been confirmed. And that's kind of like here. We were, was it 8 months in 2024 until November, give or take, until we broke out? And the retest never really happened. The lowest we went was 74,000. We didn't get down to 68,000. So we didn't have a full retest. And that's kind of shaping up to what we're printing here. I don't trade, so I just like to understand and see the chart. And it gives me a little bit of comfort about where we're likely heading, what direction we're likely heading. So I'm not caught off guards. I'm not surprised about what the hell is going on. So this is shaping up to be basically a tweezer bottom, maybe. Check back on Friday. It's only Monday. Check back on Sunday is a Bitcoin chart, not an equities chart. So that'd be very interesting. That'd be a nice tweezy bottom, and it's certainly deviated from the previous level. No point in measuring, but the point is, I don't think we get a full retest of this previous level, just like we didn't get it back here in April of this year, earlier this year. And Ethereum's up at $4,600. That's just a crazy valuation. So if you zoom out, here's some levels to consider. I think this is a more interesting level, 4,100. We really went up quick from the 4,000s all the way to 4,900, almost blasting into the 5,000s. Um, this is there's not much strength to this level, 4,300. Only two interactions dating back to 2021, which was just pure resistance. You did have a little bit of testing of support back here towards the end of last cycle, but then we have resistance, and a significant breach of resistance years later in 2025. So I like the 4,100 level. Similar to Bitcoin, my sentiment is I don't think we get these kinds of full retests down to the 4,300 or the 4,100. If you breach the 4,300, I don't think we're getting towards the 4,100s, and I don't think it's supposed to mean to you guys um, relative comfort. I just don't expect that. If it occurs, whatever. That's the sentiment that I always bring to the table. The market tells us the price. The market tells us what's going on. That's all it does. It shouldn't impact much more than that. It shouldn't impact what you feel about these assets. That's a whole nother conversation, and you guys damn well know that. So that's my general sentiment and inspection and observation about Bitcoin and Ethereum right about now. Let's do some commentary. I have a list of notes that I was going to talk about. Let's put it over here. Technical, Sunday night volatility, macro charts. We hit that. X tokens. there comes a time, and I'm just going to be brutally honest here, and for better or for worse, it is what it is. It's always best to be honest. There comes a time when anything not nailed down gets sold. You sell it. Sell anything and everything. So we're all fond of Kingdom. I like Kingdom. And I've talked extensively about the X token design, X33, which is a meaningful iteration on top of the E33. And my behavior, folks should and can expect my behavior to be the following. It's not a lock. You could withdraw from um, VE33. You could withdraw from VE Shadow and VE Rex. It's not locked at all. So if you can withdraw, the expectation is you should withdraw. So this plays into if anything's not nailed down season, you expect it to sell anything that's not nailed down, and it's just the appropriate behavior. Um, so when the time comes, you're supposed to exit anything that can be exited. I don't think I'm going to stick with treating Shadow and Ether excess cash flow. I think I'm just going to swap it over to the X token. That's the innovation. The innovation that Kingdom came up with is the X token, and I like it. It makes sense to me. It doesn't conflict with this other rule about anything that's not nailed down, you have to sell it. But it's to be understood. The innovation of the X token is to be understood in the context of this other capital management slash fiduciary rule. So my choice is likely to convert the deposits, the voter escrow deposit, into the X33 variation and let it compound. And then as the cycle proceeds, all right, great. We know what we have to do as the market starts to get overextended to the upside. It is what it is. Um, and I think that makes a great deal of sense. And I think it's rational. And other folks can consider how they want to proceed accordingly. Some commentary. We'll get to it because Tape Pusher mentioned yield basis. How does yield basis cover impermanent loss? It's because it borrows the same amount, CRV USD, from a direct credit facility, and there's a whole bunch of conversation going on. That's another component that maybe I'll cover in brief yet again. And then it rebalances. So obviously, if it's rebalancing, there's a whole song and a dance with regard to interest on CRVUSD, which there isn't because it's a private credit facility from CRVUSD. So um, this plays into the yield basis calculations, but suffice it to say, that's how the impermanent loss is cured. If you put in $100,000 worth of Bitcoin, you're getting $100,000 worth of CRVUSD as credit, and then the entire custom yield basis LP implementation is rebalancing to preserve the quantity of Bitcoin that you can withdraw from the deposit at any given time, preserving an identical amount of Bitcoin that was deposited. Withdraw the same amount of Bitcoin that you deposited plus transaction fees when the transaction fees are obviously um, greater than, per the yield basis calculations, the fees for the position to maintain in existence, interest rates and fees, so on and so forth. That's basically high level, high key, uh, how that works. They need a new bubble. Yield basis seems like the trick. Well, bubble. Bubble is a harsh word. It implies something negative. Credit in itself is a bubble. So let's not forget about everyone's credit cards. So credit cards, in fact, do exactly this on a daily basis. People are printing money out of thin air and spending it into existence. That's what credit cards are. All credit is the idea of a bubble. So yield basis will increase the CRVUSD significantly in existence, not just circulation, in existence. Um, so it's part of the equation. I think there is a conversation about bank deposits versus so what is versus currency that's in circulation in the banking system. This George Gavin talks about this topic nicely. So the big difference here is very similar. But the CRV-USD that gets minted into existence for yield basis LPs is kind of like the currency in the banking system. It's not really a deposit. Um, the real bubble is when people borrow against collateral directly into CRV-USD because that um, gets that CRV-USD gets sold and something gets purchased. So that's influencing pricing of other assets. It's contributing to transactions, whereas the CRV-USD minted into existence for the yield basis LP position isn't being sold. It's being deposited directly into LP and stays within this managed system, the yield basis system. So I find it interesting to always understand crypto and what's going on in terms of traditional financial mechanics. And to me, that description I just laid out makes a great deal of sense. Hope that helps. Tiago, talking about Agent Rational. Well, let's talk about him real quick. So, Agent Rational is a Twitter bot based on the Virtuals protocol. You guys remember I did this thing back in January. They had a cloud-based solution for configuring the implementation of the bot. They took it down. They deprecated the cloud-based solution. So basically, nowadays, us lowly folks need to do a Python implementation. So fortunately, I do have a capacity to program to a degree. I'm not the most proficient Python programmer, but in brief, over the last couple of days, I put something together. It's not bad. Um, right now, it's getting rate limited, so I gotta work out to be a little bit more efficient with the APIs, particularly Twitter APIs, even though it's going through Virtual's whatever pro account or however they whatever their caps are. I need to be more efficient with them. But it's a decent implementation. So what I'm doing is first and foremost, it's literally just a posting. So how do you get rational content? It's from relevant content is part of the equation, and how do you put that into code is the other part of the equation. Um, So it's not a reply bot. It's not going to reply to people that are replying to the agent's tweet posts yet. I'm not there yet. I got to build all that stuff. Of course, virtual is you take down the cloud-based solution. Now I got to rebuild all this stuff, and I don't know how much time I have. So I'm going to do my best to get at least rational posting working in the short term. So frankly, we'll see how this particular implementation does. It's pretty good. So I've gone through a couple of variations over the weekend and I've landed on defining cache tags I want to search for as well as handles. So the whole system will basically search for either a cache tag or a handle. And these are the types of sources of information that I would want people to look at to avoid noise, not other people's opinions necessarily. I mean, there's only one person on there. That's New Mitch Will, and obviously that's a very reasonable opinion. But this is just defining the source of content will achieve a degree of reasonableness that fits my standards. So this is a nice set of cache tags and handles. Quite fond of this implementation down here. You have this handle cache tag map, so I make sure that if we search for a particular cache tag or a handle, it's going to make sure that the post content has the appropriate text built for it. There's a couple of metrics and then scoring that's done to make sure that there's little to no repetition. So that's an interesting implementation. Avoids redundancy. So this is, I think, one post has gone out with this implementation, uh, and it's currently rate limited. So I'm curious to see what happens um, over the course of today. It's a heck of an instruction. We'll see. This is the type of thing that software development is very iterative. Um, and because of the rate limiting, and because I don't want to spam X, I don't want to just do post, 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 post. You got to take your time, and this is something that will take time. Now that I built this over the weekend, this is the furthest I got with a self-hosted solution. Historically, I always use the cloud solution. So this is something I could iterate on, which doesn't take a lot of work. You're talking about tweaking basically the worker instruction, maybe modifying a couple of the functions. There's not too many functions. There's one, two, three, four, five, six, seven functions, bunch of helper functions, private functions, more or less. Not that there's scoping in Python. That's another story. I like strictly typed languages. I'm not fond of Python too much. So there's not much to manage. Um, so I should be able to iterate reasonably well without thinking I'm wasting my time or spending too much time. We'll see how the posts come out over the next couple of days. Hopefully they'll improve. So hope that helps Thiago on an update on what Agent Rational is doing. Now, Agent Rational has absolutely nothing to do with ARAT, the token that Virtuals produces associated with a Virtuals agent. It just doesn't. And other than sentiment and people on social media talking about Agent Rational in the context of ARAT, like there's a relationship, there isn't a relationship. So all I can do is speak to Agent Rational and its behavior and function as a X bot, Twitter bot. We're still there where we talk about X in terms of Twitter. Um, so I have no opinion whatsoever on the price action of ARAD other than there's a lot of liquidity locked. Most of the liquidity, all the liquidity that went into the inception of the token is locked. And I have like 10% of the supply of ARAT, and I am the most rational human being on this planet. So that's just going to sit there. I don't touch anything. That is, for all practical purposes, locked, about 10% of supply, aside from what's in the locked LP position. Okay, that's enough talking about that stuff. Yeah, good morning. Good morning. Much a pleasure. Anna said, hi, Cap. Teddy, do any of the AI crypto crossovers interest you? No, they don't. I'm not too interested in much AI. In fact, I'm not too interested in Agent Rational. Um, I think the bots make a mess out of X. The only reason I do have an interest in Agent Rational is because of the programming. So I am a software engineer professionally. I program Android, which is written in Kotlin. It's not that Python is too different. One is strictly typed and one is not. So I'm able to do this work. So it's the software really that's interesting to me. But none of the AI crossovers really I find to be interesting investments right about now. There's a lot, just not too interesting in my opinion. Good morning, Cat. Piece of advice to the new people here: sit in the sauna and watch old streams. Lots of knowledge in there. Man, you bringing it back. That's old school. A lot of content over the years. I think we're up at almost 900 streams. How the time flies. Definitely sit in the sauna. That's highly recommended. Uh, 180 to 200 degrees will do the trick. 20 minutes. There's the more you do, it isn't really too much of a benefit. If you can pull 30 minutes uh, as you build up strength and endurance, more power to you guys. I like the advice from the hook this morning. Sir Joe, President, accounted for. Sir, yes, sir. Athletic Concept. Hey, Kappa. Soon, how are you? Mr. Spread in the house. Good morning, as always. Welcome. A rare stop by Mr. Spread, one of the best technical analysts that I know and I've talked to on X. I appreciate you stopping by today. Check out his content, everyone. Mr. Spread here. Everyone, check it out. Anna said, what is your answer to someone telling you there will be no alt season because there is so many more coins now? That is a strange idea. Um, Capital seeks the best investments. Two things that capital does. Capital seeks the best treatment, which is a regulatory issue. It's regulatory arbitrage. You also have geopolitical arbitrage, and you have geographic arbitrage. Why there's things like tax havens and tax residencies, like literally just have um, people just have second, third, fourth, fifth passports to manage some of this stuff, capital management. So that's not the way money works. No alt season. If you have 15% interest APR on a stable coin and some hedge fund has risk tolerance for 5% of a cash portfolio that's getting 4.5% on the cash with a money market fund, and they take 5% and throw it in at 15%, significantly changes the rate of return for that, you know, portfolio component. And they're obviously going to do their risk profile and the risk department and risk adjusted and whatever. The point is, change starts at the margins where they are at fine, maybe it's 1% of their portfolio. But if you're talking about 1% of all hedge funds portfolios, and it starts slowly and then it accelerates from there. So capital flows from underperformance to outperformance. If Bitcoin's going up 20%, 30%, 40%, it's much more attractive than the returns in equities. There was a time before the big brokerage houses, Fidelity, Schwab, so on and so forth, where a 5% allocation to crypto was insane. But now that seems to be kind of the base case that they are recommending, and they've recommending the clients and have configured for their managed funds. And that's part of the change starts at the margins type of statement. Um, all seasons. The problem there is when someone is presenting such a statement, they're being stereotypical with the markets. They don't understand the markets. If you use the word alt season, you don't understand what crypto markets are. I don't mean that as a dig. I mean that as these are businesses. And there's a large part of the altcoin space that um, is cash flow positive enterprise with a debt-free balance sheet and basically no capex and opex. So these are businesses, these are fintech businesses that just print profits. And that's what we allocate capital to. That's what we invest in. We have very strong business centric narratives that have driven our capital allocation methodologies. It's not meme coins we allocate to. It's not alts. We don't invest in alts here on this stream. We don't talk about that. We don't trade. We own. We own things where we expect higher lows and higher highs over the next 5, 10, 15 years on principle. And we also expect those businesses to produce higher lows and higher highs in cash flow. Those are my allocations. For example, um, for example, if Aerodrome, the volume through Aerodrome goes up 100x because Coinbase significantly increases their integration. I mean, we're literally talking about recent headline news that Coinbase is going to be significantly increasing their integration with DEXs on Base, thus Aerodrome. So the volume on Aerodrome goes up 100x. The expectation is the revenues and cash flows will go up significantly. I wouldn't dare say a correlation and express a potentiality. Point is, the number goes up. So then your cash flow will go up. At some point, it will come down. At some point, it will go up. At some point, it will go down because market cycles are part of nature. So my expectation is higher lows and higher highs with regard to cash flow. And as the cash flow goes up and comes down, so will the price of the asset. So your principal will go up, and down. Your cash flow will go up and down. And my expectation is higher lows and higher highs over the next 5, 10, 15 years. And that has nothing to do with this grandiose statement called alt season. It's a strange word and it's shallow. It's a word of inexperience because there's much more nuance and substance to these crypto markets than could possibly be encapsulated by this word called alt season. So it's a completely almost an irresponsible statement. There will be no alt season. That's like people will not buy good investments. These things are going to get bought. These are some of the most incredible investments I've ever seen in my entire life. Talking about cash flow positive businesses that have literally zero capex and opex and zero debt. These are pristine balance sheets that are in the green, only in the green. No debt payments, no real estate, no benefits packages for human resources, no executive salaries. Most interesting investments I've ever seen in my entire life. Simple as that. Hope that helps. Joel, good morning, Cap. Much a pleasure. John, with 40 acres, adding a marketplace soon and offering loans and the drones, do you feel like they're becoming more like X tokens? No, because a locked. I bet. I wonder how they'll. I wonder. I wonder if 40 will accept the permalock token. So the drones have a feature where you could lock max lock. So that's remove supply, and that plays into spot price. As supply gets locked, there's less supply. So I think actually that increases volatility also to the downside as well. There's just less liquidity depth. No, they're not like X tokens. X tokens you can break the lock. You could withdraw early, and you take a 50% haircut. So you can the supply can increase, and half of that supply increase technically gets recycled to uh, depositors, VE positions. So it's a very interesting token flow for the X tokens. I like it. That's what we've said. I just figured I'd make that statement earlier to clarify where my head is at with regard to behavior, especially as the market potentially is getting closer and closer to a period of exuberance. Hope that helps. And Stu, good morning. Oh, another one is 40 acres. I would hope that they take autopilot. I mean, isn't that like the most logical next step? Isn't this a very logical next step for 40 acres to take an autopilot deposit? Shouldn't you be auto compounding? Or wait, I think 40 acres has their own autopilot type concept because it's a self replaying loan. Suffice it to say, my 2 cents is I think 40 acres is very interesting. I personally am more interested in the autopilot implementation. I don't use it currently. I'm kind of just waiting for it to be a little bit more tested. I'm very risk adverse with regard to my assets. That's my 2 cents. I can't wait for one, this to be a little bit more battle tested, and two, for this to hit velodrome. And dear, if we, I mean, at some point, this concept um, can encapsulate any of like cash flow positive. Why can't this automatically handle um, the curve with vote market or VLCVX with vote market slash what Vodium was? Why can't it handle more and more and more? So frankly, this is a crazy concept. because all you want is to take your cash flow businesses and print stable coins. Give me the cash flow, collect the cash flow automatically. This is the end state that we all should be hoping for. One click, where's my cash flow for the week? Automatically optimize voting. I don't need to know anything about it. Just do the algorithms such that it's optimized. End state achieved. And Stu, good morning. Soon it makes me happy to see you build in Web3. I'm building, yes, certainly I think that's a true statement. I am building in Web3. Am I overwhelmingly excited about it? Not too much. I think it's a lot of noise. I think it's just a lot of, it just puts out a lot of noise into X. All these bots. Now, I'm not going to be a reply bot, so I'm not going to contribute to that noise, at least right now, because I haven't even done that implementation. So maybe in that regard, at least my agent Rational will be restrained and he will be a content surfacer, a surfacer of rational content. Okay, I could live with that, that I'm not contributing to the noise. I'm just a source, a rational filter that was programmed. Okay, I'm okay with that. I thought a concept, 3 sets, 20 minutes. Dude, if so, the only time I've done things like that are on cruises where I've had proper setup, like cold shower, cold plunge. I mean, technically, if I had the time, you know what it is? At home, I have work, I have my family, and I've been on vacation. And when I was on vacation and I didn't have, my girls were doing something else, my family was doing something else, and I was on vacation mode. Yeah, I did exactly that. Sit in the sauna for 20 minutes, get out, jump in the ice shower, and then boom, back in for another 10. Boom, another 10. And just hydrate, electrolyte. I spent like an hour and a half doing it's just exactly what you're talking about. I love that. It's nothing like that. But you gotta admit, you gotta have a fair amount of time to really take care of yourself. Not so easy nowadays. Also got to be in the mindset that that kind of time spent on things like that is worth it. And my opinion it is. It changes your whole mentality. Anxiety and frustration, they go bye-bye. They go bye-bye, everyone. You go bye-bye? That's how I used to talk to my kids. We go bye-bye. It's bye-bye time. Sorry. John Doe, good morning, Cap. Not trying to steer this political government now owns some intel. Saw that. I did. Government ownership of private assets feels like reinforcement to not own government issued money. Yeah, but here's the problem. That's the denomination of food at the grocery store. It's irrelevant what you own with regard to government issued money. At some point, you need a capacity to pay at Publix, to pay at ShopRite, to pay at Winn-Dixie or whatever your supermarket is, and to make that payment. So it doesn't matter what people think about, oh, I don't want to own dollars. I'm angry at dollars. I don't trust dollars. You're still going to need if to buy them. You got to buy the dollars so you can make payment at places. What does that mean? I've talked about that topic, right? So if you got USDC, I mean, technically you could withdraw the dollars depending on the debit card provider's implementation. But let's say you have Bitcoin. If you have Bitcoin and you're putting the Bitcoin on a debit card, you're literally buying US dollars at some point in the transaction. How do you get the dollars? USDC, you could the USDC implementation, their business model, it's a redemption. You could redeem the USDC, redeem the dollars for the USDC. But other types of, especially on-chain stablecoins, native stablecoins, or collateral products like Bitcoin, Ethereum, at some point you got to buy dollars, and that's how you're spending it with a debit card. And technically, you're not even buying dollars, which really tells us. how deep you have to go in the rabbit hole to understand this monetary system. You got to buy dollar liabilities. It's not dollars. Isn't that weird? Isn't that weird? My man. But reasonable statements, John. I appreciate them. This is nothing new, just what's on my timeline this morning. That's right. That's right. And Stu, autopilot. You claim USDC. That is correct. Autopilot is very interesting. I just need a little bit more time to feel comfortable with it. But there's $11 million deposited, which is getting there. Um, that's all I want to do. I just want to have my assets, which is basically my businesses, subsidiaries, so to speak, and I want to be able to collect. And how remarkable is it that you could press a button to collect and it's fully optimized? That's wild. Good morning, Cap. Do you have any interest in participating in building in DeFi at some point? Wait, yes, I that's what Agent Rational is. I'm not. I don't have any DeFi products that I am qualified to do. Software speaking, I've done a little bit of Solidity and Viper, but I'm not going to build a product. I don't need to. The greatest products. Where was I going with that thought? The greatest products. Great products already exist. Great investments already exist, and I don't want to. Up in my 40s, I want to sit back in a sauna and work less, not more. Working is for those hungry 20-year-olds that want to change the world. I just want to sit in a sauna and work on my tan. Um, so no, I don't want to really build in DeFi like that. I don't need to. I put my mark. I built in an Android. You ever go to Universal Studios? I built the original mobile food ordering part of the Android application when it was first launched. It may be similar code. It's clearly been iterated over the years. It's been like what 7 years since I built that, but I built the original implementation in the Universal Studios Android app, and it was 100% my code at the time. But that was a long time ago, so I don't know where it is now, but I've done a lot. At one point, I don't know, I've contributed to a lot of products over the years. But that was the most interesting one. I worked at Royal Caribbean for quite some time. I don't know what they're doing. I don't know what any of them are doing with their software, but I worked on that app. I worked at Microsoft for a bit. I worked at Facebook for a month. Uh, did a lot of American Express. I worked there for a couple years. Anyhow, our journey is fascinating. The shit that we've done. All we have at the end of it is a story to tell. The tales, our tales that we get to tell our grandkids. I hope to tell good stories, just like I tell you guys and gals. Just to, that's all we have in life is our stories. So make sure you tell good stories, ladies and gentlemen. All right. Thank you all for joining me today. Let's wrap it up. Monday, August 25th, 12:15 p.m. Thank you all for joining me. 167 people made it to the end of the stream and are all now that much more rational because of it. I wish you all a good day. Stay cool, calm, and collected during the week. And I will see you guys and gals on Friday. Till then.